Hello everyone. Today we're going to have a brief market recap, then talk about the upcoming FOMC minutes, the UK construction PMI and mortgage approvals, and the EU-wide CPI that are coming out today. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar is opening higher in Europe this morning. It's buoyed by a rise in U.S. bond yields, which were boosted by yesterday's stunning ISM manufacturing index. The counterpart to the higher dollar is a much weaker euro. The pound's also lower, against the dollar that is, after Ivan Rogers, Britain's ambassador to the EU, unexpectedly resigned yesterday afternoon. Rogers was one of Britain's most experienced bureaucrats when it comes to the EU, so his departure will weaken the nation's Brexit negotiating team. It makes it more likely that Britain gets a bad deal from the EU. Oil fell sharply yesterday, but it's gradually rising back off its lows. One reason for the decline is that apparently Libya is pumping more oil from its biggest oil field. Libya wasn't part of the OPEC agreement to cut output. As for today, the market's now focusing on the U.S. economy, and especially the Fed. Yesterday's robust ISM index has made another rate hike more likely, assuming that this week's employment data holds up. With that in mind, tonight's minutes from the December FOMC meeting will probably be the main point of interest. The odds are that the statement's generally hawkish. That could get people to consider the likelihood of another rate hike in the first quarter and thereby push up the dollar. Before then, though, the European day opens with data from the UK. The construction PMI is forecast to fall slightly, but yesterday's UK manufacturing PMI was also forecast to fall, and look what happened there. It jumped. The market may therefore now be expecting a higher construction PMI than the consensus forecast suggests. However, be careful. In fact, the month-to-month change of the two isn't correlated at all, as you can see from this graph. So the market could be disappointed here, leading to a fall in the pound. At the same time the construction PMI is being released, the Bank of England will announce its monthly mortgage approval figures. These are forecast to be up slightly, but the British Bankers Association loans for house purchases for the same month were down, and these two series do normally move together. So a disappointment here seems likely too, which may just add to the pound's difficulties. Next up is the EU-wide CPI. Yesterday's German CPI rose far more than expected, owing to a jump in oil prices. That raises the possibility of a higher than expected EU-wide CPI as well. However, the ECB is really looking for a rise in core inflation, which excludes energy prices. That one isn't expected to accelerate at all. That might mean a higher than expected headline figure could have less impact than one might expect on the euro, if there's not a surprise increase in the core rate. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.